Now this is the thing, final accounts of sole proprietorship business. Okay. Now in the sole proprietorship business, what do we have? We have to prepare the trading account, profit and loss account, and balance sheet. Though we have manufacturing account also, but that is not in our syllabus of 11, 12 is concerned. So we are not doing. We will be concentrating on trading account, profit and loss account, and balance sheet. Remember, in trading account and profit and loss account, we close all nominal accounts. And in balance sheet, we close all personal and real accounts. Or in modern approach, if I will say about accounts, then in balance sheet, we close assets and liabilities, whereas in trading and profit and loss account, all expenses and revenues are recorded. If you remember your accounting equation, which, which is that asset is equal to capital plus liability, with capital, we have one more formula that asset is equal to capital plus revenue minus expense, then plus liability. Plus revenue minus expense. That means revenue minus expense, whenever we do, we get net profit. If we take the entire revenue and entire expense, we get net profit. And with that net profit, what do we get? With that net profit, if we take just the net profit instead of taking capital and revenue, then we will be getting what? Then we will be adding that net profit in this final accounts. You will understand what I mean to say when we will be doing the balance sheet. In the balance sheet, we have capital plus net profit. Actually, net profit symbolizes plus revenue minus expense. And if expense is more, then you have to subtract. That means capital less net loss. Let's understand the first one, and that is trading account. First of all, trading account. So what is a trading account? Let's understand that first. Trading account is an account which is prepared to ascertain the gross profit or gross loss of a business concern for a given accounting period. The debit side of the account records all the direct expenses. The credit side of the account records all the direct incomes. See, in the credit side, we have sales, so direct income. Closing stock is also considered as an income type only because it is kept for the next year. Debit side of the account records all direct expenses. Direct expenses means those expenses which are related with purchase or those which are related with factory or manufacturing. Similarly, when we subtract the income from expense, we get gross profit. With that gross profit, we have to subtract the further expenses in profit and loss account. So if we have a formula of gross profit, it will be like this: net sales minus cost of goods sold and direct expenses. These two has to be minus. Now, what is the meaning of cost of goods sold? Cost of goods sold also you should know the meaning. Cost of goods sold means that, one sec, cost of goods sold. So we have seen cost of goods sold is opening stock plus purchase minus closing stock. Actually, it should have been direct expenses also, direct production expense, but we are not taking that because we have written it in gross profit over here plus direct production expense. That's why we are not writing. So you notice that opening stock plus purchase minus closing stock is cost of goods sold. If you see about your trading account, you see the format, it is sales plus closing stock. This is the revenue part minus opening stock minus all the direct expenses like purchase, both cash and credit, and net purchase. That means less purchase returns you have to do. Then direct expenses like wages, carriage inward, freight. Now only carriage also means carriage inward. Inward means you are bringing the goods and paying the carriage. Then factory expenses, coal and coke, motive power, gas and fuel, lightning. Then import duty, octroi, dock charges, royalty on production. You are paying royalty to somebody. Expense type royalty means. And even all these things when we get the balancing figure as gross profit. So the formula stands, there are two formulas for gross profit. One, you take sales plus closing stock minus opening stock minus purchase and all other direct expenses. Or we can say gross profit is from this side only, cost of goods sold. Instead of opening stock and closing stock, we will take cost of goods sold as written over here in the formula. Over here, opening is this one, net sales minus cost of goods sold plus direct production expenses. This is also a formula for finding out gross profit. You don't have to know the formula for this chapter. Directly, they will be asking you this sum, and this format you have to remember, either of the gross profit or it can be a gross loss also, and you will be able to do the sum. Now, let's do one trading account sum. This is the trading account sum. Prepare trading account for the year ended 31st March 2020 in the books of Messrs. Asset. Opening stock is 500. Cash purchase is 1000. Cash sales 9000. Return inwards 800. Return outward 500. Credit purchase 5500. Credit sales 12,000. Carriage inward 400. Wages 2500. Freight 500, cash in hand 9,500, fuel 200, octroi 100, royalty 300, and closing stock 3,000. These are the informations given, and they have asked you to prepare a trading account. So this is the trading account. See, the opening stock was given over there 500. See, opening stock 500, and then we have what? We have this next item, cash purchase. See, cash purchase over here. Cash purchase, that means this 1000 over here, cash purchase. And then there is a credit purchase over here, 5500, that we have written over here. That is 6500 total. Less purchase return or return outward 500. So that also subtracted, and we got in the final column 6000. Then wages given 2500. Then freight 500. Cash in hand will not come. It's not an item of expense. It's an asset. Fuel, nothing is mentioned. It's a trading, it's a manufacturing expense type. So fuel 200 is written over here in the trading account because of direct expense. Octroi is nothing but a type of customs, type of duty when you import the goods. So octroi. Then royalty is nothing but when somebody is producing for you, you are giving them the royalty. That is 300. Royalty is a direct expense related with production.
Sir, what does octroi means?
Octroi is type of custom duty when you bring the goods from the foreign countries. So this is what we have written all. And then sales is given. The cash sales is 9,000. Credit sales 12,000. And less sales return. Return inward means sales return. Return inward, which is coming in, means back to you, back to the seller. So 800. Return inward 800 subtracted. So 20,200. And then, yes, sir. Okay, closing stock is 3,000.
Sir, what does octroi means?
Octroi, I told that it means custom duty, a type of duty it is. When you import the goods, it's a duty, it's a purchasing expense, it's a direct expense. Then closing stock that we have written, given over here, closing stock 3,000. And then we have added, as we do the ledger balance, that way we have done 23,200, 23,200. And we have added these all and subtracted from 23,200. This is the balancing figure, 12,500. That is by gross profit brought down. Means gross profit, we got the balancing figure, and that gross profit we bring down also in the P&L account. Actually, our P&L account starts from here only. We have trading account of Messrs for the year ending. We used to write trading account for trading and profit and loss account. But we are showing only single sum. That's why this is like this. Now you take a screenshot of this sum and send it to me now. This sum, please take the screenshot and send it to me now. Okay. So take the screenshot and send it to me now, this sum. Thank you, students. So we are over with our trading account. So trading account is done. Trading account is over. So we will be doing profit and loss account after this. Clear? So profit and loss account we will be doing. Thank you, students. Thank you. Thank you. I will be doing profit and loss account after some time. Okay. I over it.